record. I'll record this. Maybe I'll put it up on YouTube, or I'll send you the file. I'll think about it. Um,
Cool. No
cool.
problem.
So now that the market has broken that level and I've added to the position, I'm happy. I'm looking now. I'm looking for areas where I could raise my stop loss to. So that looks like that gap and drive there. That looks like a nice place to stop, just below that 50-day exponential moving average. So for entries again, I go back to the higher time frame to see the levels that were significant before that collapse right there. So
Yeah.
63.70 seems to be an important level on a 4-hourly chart. Let's go back to the 1 hour chart to see how that looks like. We're not very far from it. Um, that looks like a nice place to be raising a stop loss to. But my first target is I want to stay behind the 50-day exponential moving average for as much as I possibly can, especially in the initial stages of the trend.
Okay, cool.
So the market reacts to that level. When it breaks, now I'm raising my stop loss to that level right there. So what I'm expecting the market to do, not actually the same. So what I'm expecting the market to do is to have a bit of because now we at new highs territory, right?
Mm-hmm.
So I'm expecting the market to come back and retest the 63 rand level, and then on when it re-breaks that high close after the swing low, I'll raise my stop loss to that just below the traffic, and then add to the position. So there's that reaction I was talking about.
Let's hit the stop loss.
Yeah. So now when it comes back above that 64.90 level, um, I want to raise my stop loss and add to the position.
Okay, okay.
So, okay, now it's taking some time to break through, and has made a higher low. With you see this, you remember the bullish engulfing candle I was talking about the other day.
Oh, okay, cool. Yeah.
So a bullish engulfing candle opened, so it literally engulfs the prior candles. So as you can see, it opened below the close of the prior candle, so it gapped lower in the morning but rose higher and closed above um, the open of the prior day. So it engulfs. Um, so if you can put this candle on top of these two would disappear every time, right? So that's kind of,
Okay.
yeah, it means that the buying was very strong here. So once the market breaks that 64.90, instead of raising it to there, I'll raise it to 63.70.
Mm-hmm.
Nice high lows, nice high lows. So now you see why I don't like rushing into to raising the stop loss. So now instead of raising it to that gap here there, I'll raise it to just below the 200-day exponential moving average.
Okay.
So now the 50 becomes more important. So I keep fishing for places to hide. I keep fishing for places to hide. Let's see there. So now we have a breakout. I want to raise my. In fact, we had the breakout there. That's the candle. That's the candle in which I have to add to my position. So I raise my stop loss to that there. What is it? Modify 63.22. Modify. And then I do what? Because my stop loss is above that last entry point, I add to my position. Right, good. So again, 50-day holds. I'm interested in when that happens. I want to mark the close. For resistance, for drawing resistance lines, I like marking the close because the close is a price at which traders accepted the risk of going overnight. So it becomes an important level for me.
Okay. Okay.
So it broke out from holding the 50-day exponential moving average. So I raised my stop loss slightly to 63.88. So what starts to happen now is that the earlier leg of the trade increases in profits, and the later leg of the trade, the last leg of the trade, is reducing in risk. So we're starting to move more and more into profitability.
Okay.
So so it held that level there, didn't respect it when it came back to it. So what I want to do, so I would have done it immediately here, but I didn't expect that much of a gap. So now raise it to 64.29. You see, slowly but surely, reducing the risk on that last leg of the trade. 64.29. Modify. Okay. So now that we if I jump back to a 4 hourly chart, in our context, we're at new highs,
Okay.
right? So I don't have a reference point to go back towards. So to solve that dilemma, let me delete all these. To solve that dilemma, there's on how I made $2 million in the stock market. Davos talks about the the box system.
Yeah.
You remember?
Yeah.
Yeah.
The
So
the price moves from up through the boxes.
yeah. So now I start once we start entering new highs. Now I start to I want to draw my boxes instead of just using chart patterns. But over time, I eventually go back to patterns because they start to build again. They start to have reactions. But often, when an instrument goes to new highs, um,
Mm-hmm.
there isn't much of reactions. They just run when they're approaching new highs.
Okay.
So now, flirted with the high box, you see it reacted with that box. So the there's a chart pattern in fact that box system eliminates from a chart pattern that says the market will run up approximately equal to the prior range.
Okay.
So when the market breaks out, that rally would last approximately equal to the high to that prior range. So that's kind of how that box system works out from psychological standpoint. So
Okay.
now
Cool.
the market is respecting again that 50-day exponential moving average. Okay, at this point, because of the price action, I no longer need the boxes. So the
Oh, okay.
boxes were for if it ran without a swing low, without a pullback. Um, so now the selling is starting to dry up. Um, we see the bodies of these candles are starting to reduce. These are called dojis. These candles are called dojis where the body is small but the wick is big.
Mhm.
Yeah, they are reversal candles.
Okay, cool.
So then I got stopped out. So I got stopped out at a nice profit. Let's go to history. There. Nice profit, 4,000, some 3,000, some change, and that last trade lost us just about 1,000, just over 1,000. So net, we're looking at about, so what is this? 4.8, let's call it 5. Yeah,
About
nice.
seven,
Yeah, about 7K. We're looking at about 7K. Um,
seven some.
yeah, so nice profit. We try. We then look for opportunities again. So I look once I get stopped out. I look for places where I can jump back in. Initially, I have this 63 rand 27 as my target to place a stop loss. That's just because it's a low. So I'm going to pick the level that was respected the most. So this 65.20, when the market came back to this level, it respected it and came back, it respected it, it came back, it respected it. Even now, when it came back to this level, the market had a reaction. So this 65.20 becomes an important level. So if it closed through 65.20, I start to rebuild the position.
Okay, cool.
See, again, well respected, well respected. There you go. So instead of that, I will reduce my risk a little bit. We'll kick it off with 93, 63, 92. Start to build a position. So when it breaks there, I want to be raising my stop loss again. So for now, that target would be 64, 64, 65. Let's see what happens. If I get a nice high place a stop loss, maybe there, maybe there. Pause. So now it broke out to the upside, right? But it breaks out with a
Mhm.
doji. A doji, and remember, a doji is a reversal candle. So
Oh, okay, okay.
because it closes out with a doji, what I tend to do is I want to wait for it to. I want to close above the doji. So I want this pattern to be invalidated first, which happens the next day. So what do I do? As I can see, we have a bunch of dojis there. So I'll raise my stop loss to there, and I have my 50-day exponential moving average protecting me. So which means I can add to my position. My stop is. I need you to go there. My stop is 65.75. So that the first leg of the trade is at break even. So now I can add to the position. So again, because
Mhm.
we're at new highs, the boxes come back in play.
Cool.
Right? Yeah, that's a good place. So I'll cover those closes there. And here I'll cover that. So now the next time I want to raise my stop, I want it to be in this box. So let's back, 50-day holds.
Okay.
See, again, when it reached the top of the box, it had a reaction before breaking. Now we broke into an even higher box, right?
Mm-hmm.
I look at the market, and okay, there is where I want to place my stop loss. So I'm gonna have to wait before I add to my positions. So I'll raise my stop loss to there. So now it's at 66.95. Looks like the market is having a bit of a reaction, but not by very much, so I'll be patient. Um, I don't want to be raising my stop loss to around those lows there. The next time I see something interesting, that is interesting. So now I want to delete the entire thing because we have a resistance level now that I can look at, and I want to raise my stop loss to around that 50-day exponential moving average. But before we do that, let's see how it holds up at the current. Take it low, uh, back. So in that breakout there, because it was a gap and drive, so I can raise my stop loss to around that 50-day exponential moving average. So what is that? So the candle I'm looking at is that gap and drive followed by three white soldiers. So three white soldiers is three green candles consecutive back to back from red ones. So nice couple of patterns working in our favor there. So raising the stop loss to around 67,
No,
63.
no, those three candles, what do they signify?
That there's momentum.
Oh, okay. Okay.
Yeah, there's moment. It's a bullish pattern that there's move. So it's these especially the candlestick patterns. You don't want to use them in isolation.
Okay.
So like in this example, we see this pattern. It's a three white soldiers pattern. It signifies momentum, and I think if you plot volume, there's a good chance that volume was increasing as well. You see, during these three white soldiers, we had an increase in volume from right. So, but volume is not an indicator I watch out a lot because I don't trade size where volume might be an issue or liquidity might be an issue. But I do use it as proxy for as wind at the back. So like this pattern is just wind at the back. So it gives me more confidence that okay, this is a nice breakout. Not to say I'll bet a bigger size than I normally would. I'll still follow the position size algorithm, but it gives me that confidence. Like you know what, this is a nice breakout. There's some wind at the back.
Okay.
So again, go back to the boxes. Now that's our new range. Gonna break out from there. Oh, no, no, no. My bad, my bad, my bad. I forgot that I ought to add 67 to 3. Mm. Now that there's a pullback down to that 50-day exponential moving average, the need for boxes goes away again. So it's so the way that I trade, man, I morph with the market, and when the market changes, I change with it. When the market, I adapt with I'm not stuck to a rigid thing. So there's a fair bit of discretion in what I do.
Yeah.
So there's the breakout there. There's the breakout there. So I raise my stop loss slightly to below there. Was it at 68? Right? And then again, if I can not delete these lines. Again, it's box time.
Yeah.
And then when I read that book, the Davis book, it was like a light went on, man. These boxes were a revelation. Um,
Yeah.
I actually when I was I listened to the book when I was on a morning run. Right, it was a
Mm.
Saturday morning. I was listening to talking about these boxes. I'm like, the only thing I could think of while listening to the book on the run is like, I want to test this when I get home. So I've stopped in. Nice Molanyana profit. Let's see, that 3,000, 3.5. So about two grand.
Yeah, this is good.
Yeah, about 2 grand because that's gonna offset about 1.5. So not too bad, not too bad at all. So again, maybe not everything. Maybe just the boxes. There you go. So now I wanted above 69, 60. Ah, that's not very good. Nothing good happens underneath the 200-day exponential moving average, man. That's a that's an axiom to remember. So now
Mm.
we've had the golden cross. So here, see, when I look here, my 50 is still below. So I had a golden cross. Set the bar a little bit higher again because I know the first rally won't hold. So I expect the first rally to die at that 60, 69, 60. So might as well not participate as yet.
Okay.
Okay, now that is fallen by a bit. Now that becomes a. So now I see we have a pattern called a cup and handle pattern. And there's your handle. So now, when you look at this chart, right, we have
Mhm.
a few things going for us here, right? We have
Mhm.
um, this basing pattern, a cup and handle pattern, which, by the way, when you trade with how it's traded is the height of the, similarly with the head and shoulders pattern, which I'll get to in a moment. The height of the you project the height of the cup to the upside with a stop loss just below the handle.
Okay, cool.
Stop the stop loss just below the handle, so you can put it just around the 200-day. So this is your risk, and that's your potential reward. It often
Okay.
gives you a nice 2-to-1 risk reward, unless of course you add somewhere in between. But again, I use patterns as wind at the back. I don't trade before they target. So I use it for example, here with this cup and handle, I'm going to use the rules of a cup and handle or head and shoulders, which I'll get to in a moment, to place my stop loss. It also helps guide me around stop loss areas. So that when looking at this chart, it's very positive. We have an inverse head and shoulders pattern, which is one of the most reliable reversal chart patterns. We have a cup and handle pattern, which is also amongst the more reliable um, chart patterns. And when a chart pattern, the longer the chart patterns takes to build, the more significant that chart pattern becomes. So we have
Okay.
a wide head and shoulders pattern and a wide cup and handle pattern with a golden cross at our back. So that's significant wind at the back. Um, there's your breakout there. Um, so I see that I can have my 50-day exponential moving average act as my protector. So I start to build a position with initial stop at and again, because of the wind at the back, I can risk it a little bit more with a tighter stop. Knowing that if it rockets back and it re-breaks again, I can just jump back in. So instead of taking that much of a risk, I'm taking that much of a risk, in bettering my risk reward ratio.
Okay.
So the reversal candle there. There. Now I want to. So see that traffic there means there was a bit of consolidation on the shorter time frames. So if it breaks, and you see we have a doji there, that's a reversal chart pattern. I'm expecting the market to test that 50-day exponential moving average. So if it breaks above 70 without damn, okay, if it breaks above 70 coming back to this 50-day, um, uh, I'll use this level as it is. Okay, now I got stopped out. So yeah, let me pause. You see, I got stopped out. Yeah, you see, my risk would have been here. So I would have been stopped out anyway. So I would have been stopped out anyway. So, but I have no
Okay. Okay.
qualm in jumping back to a trade. So you know why I was saying a sigh of disappointment is because I know this is
Mhm.
a recent. Yeah, I knew that this is a because I saw the price. I saw the price. Um, and I know that we're at these levels at the moment because we're at the all-time highs. This is a level that I'm actually waiting for to break out. So the simulator has reached the ends of reached. We are now today, so there's no more
Oh, okay,
simulation data.
okay,
So there's no.
okay.
So if I zoom back at the period that I traded, and I look at where it started, we started somewhere around there. You know,
Hmm.
it's a trading session to be proud of because we stayed away from a falling market. When the market started to run, we picked up some positions and we rode the market fairly well. Um, you know, there was a strong dip that took us out, but we rode the market. I rode the market fairly well, and I believe that moving forward, if the trend continues, I'll catch a fair chunk of it. But that's how I try to get at. Sometimes this doesn't happen. Sometimes this massive drawdown doesn't happen, and you hold on to a big position by just playing hide and seek with your stock.
Yeah, yeah, yeah.
And then if let me perhaps we look at the MTN example again. But do you understand how? Do you have any questions before
Oh,
on
that's good. I think
on how it's trading and what do you think as well?
Monday should probably do it again.
Hmm.
So maybe we should go over it again on Monday,
Yeah, yeah.
but with
But
something like Nasdaq.
yeah, but I wanted to show just show you how I trade. So on Monday we'll
Hmm.
go back to the lazy system to get you um, regimented into executing trades.
Yeah.
But we will um, from time to time I'll come again and demonstrate how I trade. Just to for you to watch, and maybe the subconscious lessons will pick up, which will be evident to you in the future. Maybe it'll be a style that you want to adopt from. So from time to time, I'll be I'll be showing you how I trade. We'll be doing this from time to time and see how we. You see, for example, on this MTN trade, we kept on picking up positions without a significant drawdown that makes a lower low.
Mhm.
So sometimes you find a trend like we just did with the Search 14, where um, there's a few lower lows in between the trend, but the overall direction of the trend is still decidedly upward. Um, Also, there's times where you find yourself with a nice smooth trend, and unfortunately, there's no way of telling in advance which one will be a nice smooth trend, which one will be a choppy trend. So you want
Yeah.
to try your best, man, to hide your stop as best you can, so that
Mhm.
just in case you have a trend like this one.
Yeah, yeah, yeah. Now that's a good one.
Yeah, this is another one for the highlight thrill.
That's a good one.
Another one for the highlight thrill. I don't know. Have you seen my journal? My
No, let me see. I
Does this look familiar?
think you might have showed it to me before.
Oh, okay, okay, okay. Yeah. So the column in which that MTN trade we were looking at the moment. So if the stop is hit, it's a 64%
Hmm.
return, and you
Uh,
see that level here, that one. one 179.57 level is the next level I target to place a stop, right? Once this 191 level breaks. If you break the 191, I raise my stop to 161. Hopefully the 50-day is above us to protect. If it's below,
Mhm.
maybe I'll raise it to just below the 50-day exponential moving average, but certainly above that last entry point, right? And
Okay.
then what I do, I add to the position. So if I raise my stop loss, let's say let's be a bit on the cautious side and say the market retests um, this old resistance, ne? Comes back and it
Hmm.
holds, and now my entry point is at that 191.61. So we have something of that sort, which by the looks of it, it looks like that's exactly what's going to happen. The market will come to close that gap because often, more a lot of times, gaps close, right?
Okay. Okay.
So um, I'm expecting the market to come back to retest that 173 rand level, but hold it as it closed that gap. But I'm expecting to come back and re-break that 191 level. At which point, if we break 191, I raise my stop to 173. So if I raise my stop to 173.40, that profit will rise to 99%. At which point, I put on a 10% risk.
Okay. Cool. Cool.
Is I put a nice 10% risk, which means the size, man, the size of this winning trade becomes overly significant.
Yeah. Yeah.
Yeah, it's all risk management. It's all risk management. It's all money management. It's all self management. Um, to maintain the discipline, not to take profits as it rises. You know what I
Mm.
mean?
Mm.
To hold on. It's doing your own thing, gunning, sticking with your conviction, and just being patient. I'd say is the key factor. Patience. It requires a lot of patience, but mostly it's around money management and risk management and position sizing. The
Okay.
big
Okay.
secret, the
Cool.
big secret here is really, really position sizing because as you can see, one, if you come back here, this one trade, right? So
Hmm.
if all of these stops are hit, I'm up 66%, and this one trade accounts for more than half of that profit. This one
Yeah.
trade.
Yeah.
If you look here, I'm up 195%, right? Half of that is coming from this one trade.
Okay. Okay.
It requires a lot. So about three-quarters of my portfolio's returns at the moment come from two trades.
Yeah. Yeah. Okay.
You see,
That's
so
good.
it requires some patience, man. It requires, if you look at that second big trade, and that's it, man. From time to time, you'll find a nice smooth trend that doesn't have deep drawdowns.
Hmm.
You know, sometimes you don't always often uh, get these kind of trends, but when you do, you want to capitalize. Once they few and far in between, but once you catch one, it's you capitalize, and it's a nice feeling to sing one to the fences.
Yeah.
Yeah, right.
All
So
right. Cool.
yeah.
That's
If,
good.
if no questions, man, we can park it here. I hope you enjoyed that. It was quite fun for me. I hope you enjoyed it. I hope you learned something. Hope you're enjoying what we're doing as well.
Yeah. No. Definitely. I'm learning a lot.
Yeah, yeah.
So this is good.
Now, gents, let's park it here for the day.